What's going on, guys? In this video I wanted to analyze Visa stock. So we'll look over the Visa chart and how it compares to the rest of the payment industry. We'll look over some news about why Visa might be dropping, and then finally we'll go over some price targets using PE ratios and check out some of the financials behind Visa. So make sure you stick around until the end of the video, and if you like the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that subscribe button. So first, let's start off by looking at some charts. So here we have the Visa chart, and you can see Visa is down 1% today. In the last 5 days, we're down 2.33%. In the last month, we're down almost 6%. 6 months, down 14.7%. And then year to date, we're down almost 10%. So you can see that we spiked, or Visa spiked up here and into July, and then towards the end of July, early August, basically the stock started falling, and ever since it's just been on a downward trend. So how does that compare to the rest of the payment market? So here we have PayPal, which is very comparable. PayPal is obviously a slightly younger company, but you're down here 1.7% on the day. 5 days, you're down 2.78. The month, you're down 19%, almost 20%. 6 months, you're down 30%. And then year to date, you're down 20%. So PayPal, like I mentioned, it's a lower cap stock. It's a younger company. There's kind of a little bit more innovation going on with it. So you kind of expect it to have larger drawdowns than a company like Visa. So a company that's more comparable to Visa, you have MasterCard. So MasterCard was actually up on the day, just barely 0.6%. On the 5 day, it was down 2.63%. On the month, you're looking at 3.97%. 6 months, 12%. Year to date, down 8.36. So again, that's very comparable to where we saw Visa, and you can see a similar trend. So in all these stocks, we'll jump back to PayPal here in a second, but you can see everything kind of topped out around July, and ever since then you've had a downtrend. So MasterCard shows a similar trend there, and then year to date, here's back on Visa, you see around July again the whole market topped out, and everything has kind of been pulling back ever since then in all these stocks. So here we'll take next a quick look at why that might be. So overall, the payment market is really dropping on the back of interest rate concerns. Obviously, as interest rates increase, money becomes more expensive, less people are spending, and basically credit cards get used less. So that's really the overall drop in what you're seeing for kind of the correction there. Also people taking profit and whatnot throughout the market across these stocks. But the biggest thing kind of holding Visa down and driving Visa further down is the talks of Amazon dropping Visa as its partner on US credit cards. As you can kind of see here, there's just general talks that Amazon is looking into MasterCard as well as American Express. But these are typical talks, and even the CEO, I don't remember if it was the CEO of Amazon or if it was the CEO of Visa, but basically one of them came out a while back and said that they do this every time that a contract comes up. They want to obviously look into their possibilities and try and drive costs lower. So even if they plan completely on sticking with Visa, they want to basically get with MasterCard, see what they have to offer, see if they can offer lower rates, and then also talk with American Express. It just creates competition in the market and basically puts Amazon in a better position to get better pricing and basically drive their margins even lower. So overall, it's a healthy thing for all of the companies, just basically driving competition. So another important thing to look at is, what if the company falls on hard times? What type of situation will it be in? So here we're looking at the balance sheet on Yahoo, and basically you have your current assets, you're sitting at 27 billion, and for current liabilities, you're at a little over 15 billion. So you almost have a 2-to-1 for current assets to liabilities, and then for non-current, so longer term assets, you're at 55 billion. Well, long-term liabilities, you're at 29 billion. So again, almost 2-to-1 there. So you have a really good, solid, basically balance sheet, where even if the company were to fall on hard times, it has the cash basically to make it by. So last thing up here, we want to look at the PE ratio, that's the price to earnings ratio, and we want to basically be able to determine what a valid price target for Visa might be. So just go over the information that we have here right now. We have the current price at $196.32. the forward PE of Visa is sitting at 27.78. And let me just jump over and kind of show you where I'm getting these numbers from. So on Yahoo, you have the current forward PE ratio, 27.78. And then I also took the average. Basically, we started seeing the drop like I talked about kind of June, July-ish. So what I did is I took these three numbers and averaged them for Visa's forward PE, or basically potential forward PE. And then I also took PayPal, basically averaged again the same three numbers, and then MasterCard averaged again the same three numbers and put those in here. So here you have the average forward PE for Visa, you have the average forward PE for MasterCard, and then the average forward PE for PayPal. So what we can do is basically do a little math and see what potential price targets would be. So basically, right, what we're saying is the price right now, the price to earnings is at a multiple of 27.78, and its potential, or what we've seen it trend at in the past, is 37.6 for Visa, 41.66 for MasterCard, and then 49.96 for PayPal. PayPal, I think, is basically the least relatable because it has the highest amount of growth potential. Visa is actually the largest market, so this is going to be the most relatable and probably realistic price target. And what we're getting there is a price target of $265.84. That presents a 35% return, which is huge, especially thinking at it short term, that basically this is probably realistic within the next year of hitting this price. And then MasterCard, if Visa were to go to a forward PE of 41.66, you'd be looking at a price target of $294, which is about a 50% return. And then also PayPal, if the PE ratio, the forward PE ratio was to go to a 50, you would see a price target of 353, which is almost an 80% return. So basically those are huge numbers. Again, I do believe that this is the most realistic, which $35 35% return is a great return. So the last thing we have here is looking at what analysts are saying about the stock. So this is Wall Street Journal, and what we have here is we can see how many analysts are basically giving it a buy rating, overweight, hold, underweight, and sell. So there's only one analyst as of now and as of a month ago who was giving it a sell rating, and you have 27 analysts as of, again, this current time and a month ago that were giving it a buy rating. And what I like to look at here is the price target for Visa. So right now we have a high of 308, we have a median of 276, and then a low of 202, which comes out to an average basically price target of 274. So what we can do is basically jump back into here and see how that compares to our price targets. So we are actually even more conservative than that price. We only have 275 compared to their 265 compared to their basically 274. And to look at their numbers, basically they're saying 274.23, and that would present a 39.69% return. So overall, I think basically this number here is a conservative, healthy estimate, and it still is a great return of 35%. If it shoots over, then you could potentially be looking at 40 to even 80% returns on the stock, and this is a healthy company that has basically plenty of money on its balance sheet, and also has a relatively large market cap, one of the largest in fact. So overall, I think it's a good company, a good stock to invest in. It's probably the safest out of the three that we kind of looked at today. If you want to be a little more aggressive, I would suggest going with a PayPal. Obviously, it has a little bit more longer term. It's got to work some things out. But if you want kind of an established company with a solid potential return, I think Visa is probably your best bet. So overall, I hope you liked the video. If you did, like I said at the beginning, make sure you drop a like down below. If you want to see more videos like this, make sure you hit the subscribe button. And as always, have a wonderful rest of your day.